Good evening, everyone. Hope that you are doing well. Hope that everyone can hear me okay. Looks like my sound is working all right. So I want to welcome you to tonight's webinar, How to Become a Stock Market Day Trader, be successful at it. I'm going to go through a lot of different topics. Let's just take a quick look at the itinerary. Before I do, actually, this is, I guess, our whole purpose, and that is to be able to find day trades like this. This was an amazingly good one. Entry signal right there, huge move to the upside. Those don't happen daily, but they probably get a couple of those a month. And that's what I'm going to try to show you about today. So what's the itinerary? First of all, I'm going to explain what is day trading and what is swing trading. I'll give you a little bit of my background story, how I came to be a trader. I will describe my approach to trading. Because I'm going to ultimately show you the performance of my strategy, I have to first teach you how I measure performance so that it makes some sense when we look at the performance. Take you through my typical trading day, the things that you need, the different components of a successful trading operation, the things that will help you succeed, and how I can teach you my approach. And then finally, I'm going to show you the performance of my strategy since the beginning of March. And if you've watched a presentation from me in the past, perhaps you've watched one of the YouTube videos, just know that I've made some refinements in the past few months, and the performance is probably twice as good as it was a year ago. And the shape of the equity curve, which is something you'll understand as I go through this presentation, is a lot more favorable. And I'll talk about those things at the end when we look at the income potential based on the performance of my strategy. All right, so let's begin. What is day trading? Day trading, by my definition, is entering and exiting positions within a trading day. So typically we are 100% in cash overnight. We are focusing on stocks that are moving abnormally and are actively traded. I do not care whether the stock is going up or going down because we can make money in both directions. And certainly in the month of October, the down direction has been the way to go. And in fact, it is more profitable when markets have corrections like we have seen in the month of October. And again, I will show you those statistics at the end of the presentation. So we're willing to buy stocks, we're willing to sell short stocks. We can trade ETFs, we can trade commodities in the same methodology, although that's not something that I do. You can use options to trade some of these positions on the more liquid stocks. But essentially day trading in and out within the trading day. So this is my cockpit. I sit in front of these screens through the day. Some of them are screens for analysis, others are screens for order entry. Some are screens for people who want to follow me. I have a webinar that I do every day where you can see my real-time trade alerts. I'll talk a little bit more about that as well. So when we're day trading, we are trying to find stocks that make action candles. And I'll describe a little bit more detail later what an action candle is, but they're signified on these charts by the pink dots. And when the pink dots occur within the confines of some other rules, we have a trade. And so in this particular case, entry price at 32.14, risk management at 31.94, and the stock moved up through the day to close at 33.07. You can see here there are some indicator values. Those are all part of my strategy. I have my own indicators. I do not use commonly used technical analysis indicators. I use my own that I have developed over a number of years. I'll talk a little bit more about how you can get a hold of those as we go through the presentation. Now, the next type of trading that many of my students do is called swing trading. This is not so time sensitive, not so demanding on your time. It is entering and exiting positions within 2 days to perhaps 1 month. And it is focusing on stocks that are abnormal, as it is with day trading, but In this case, we look at a longer term chart, either the 13 or 30-minute chart. When I day trade, I look at the 2-minute chart for my entry signal. So as an example of a swing trade, this is a stock that again has the pink dot here. All of my strategies revolve around the action candle. Even if you're holding stocks as investments, which we'll talk about on Thursday during that webinar, it's all about the action candle. The action candle, again, my own algorithm or indicator. So in this case, entry candle there. This stock ultimately gapped up big. This was a what's called an action break strategy where we use the daily candle. I'll talk about that as well later on tonight. So a little bit about my background and how I came to start trading. I was a student at the University of Calgary back in the late 80s, early 90s. And I had an interest in the market. I was in business school. I was studying finance. I would hang out with friends on the weekend and we talked about stocks a lot. I used to hang out at the Alberta Stock Exchange. I lived in Calgary. And the Alberta Stock Exchange was one of the few places where I could get real-time stock quotes. So I would hang out there as much as I could instead of paying for real-time quotes, which back then was about $600, $700 a month. Keep in mind, that's 25 years ago, almost 30 years ago, actually. So $650, $700 a month for a student with a few $1,000s to trade with was a lot of money. So I used to hang out at the Alberta Stock Exchange because they had 3 real-time quote terminals outside the trading floor. And I would use that to identify stocks that met my criteria. Even back in those days, I was something of a strategy trader. I looked for stocks doing abnormal things, and I would write down a list of the stocks doing abnormal things, rush back home before the market closed. Market closed at 2 o'clock Calgary time. So I would rush back home and check the charts. Back then, it wasn't so simple as going onto the internet to check charts. I actually had to download charts one at a time. And the process took probably half an hour to look at maybe 10 or 15 stocks. So I would download these charts as quickly as I could, look for certain patterns that I had studied, and then call a broker. We didn't actually go online to make trades. We actually had to call a human being and make my trades. And back then, the commissions could easily be $100, $200, $300 a trade. And so it was necessary for the trades to work a lot more than they maybe have to nowadays, because the margins were, or the cost of the trade was a lot higher than it is now. So I did that through my university years. I had some success. I drove a kind of a cool car when I went to university, and I didn't work. I sort of made a little bit of money off the market, paid my way through school. When I left university, I wanted to work on Wall Street, and I think I had 60 interviews or something between Wall Street and Bay Street, and nearly got a job with a bank in New York. And at the last moment, they hired someone from the US because it was easier to hire them because I was Canadian and would need a visa and that sort of thing. So I basically went home with a stack of rejection letters, not sure what I would do next. But I always loved trading, and so I stuck with that, and I started to get better and better at it. And I did a little bit of work for public companies doing their investor relations to help pay the bills. I was even a DJ in the evenings so that I had my time during the day to trade the market. I was living in a little basement suite that I shared with a roommate, and I think it was like 600 square feet or something, just near downtown Calgary. And, I just kept studying the market and trading and learning how to manage risk, learning how to pick winning stocks, how to know when to exit trades, all of these things that, take time to learn. And it took me about 8 years before I was really successful. And about 8 years after I started, it started to click. And the markets were hot, talking late 90s now. Markets were hot, and I had, sort of saved up $30,000 from trading. and I turned that $30,000 into $500,000 in 3 months. Got married and did all the things that we do when we're married, have kids, buy a house, that sort of thing. I also started the Stockscores website around about late 90s, early 2000, I believe. And even today, it's based on the same concepts. And why did I start Stockscores? Well, back then I was spending hours and hours doing research, and I was having to download data from these data sources. It just was so time consuming. And so I felt like I needed to build my own tools because the things that I looked for weren't common. I wanted a tool that fit my methodology, and I couldn't find one. So I decided to build one myself. And I partnered with another website company, something called Stockhouse, which was a popular website back then. And essentially I knew the method, and they had the programmers and the infrastructure, and we partnered up and we built the Stockscores market scan. Now it's changed over the years. We've updated it a few times, but essentially the same concept as what we've always done. So, like I said, I found success. I built my own tools. I built a business around those tools. Those tools are very expensive. They cost hundreds of thousands of dollars to build. They cost thousands of dollars a month just for data to keep it running. And so I built a business around selling those tools to other people. I don't market them to a lot of people. I don't want a lot of people to use them, but we have a small little following of people around the world that use my tools, that I've taught my method. And it's good for everyone. It covers the cost of the tool, and I get to use the tool myself. So why is trading a great occupation? In my mind, the greatest thing about it is freedom. I can really live anywhere that there is a hole in the wall to plug my computers into. The flexibility, I work from home. In the past few years, I've lived in Hawaii, I've lived in Whistler, I live in Kelowna, British Columbia now. I find it super fun to trade the market. And of course, there's the financial reasons. You can make a lot of money trading the market. I've made, a lot of money over the years, had a very good lifestyle from the market. And I've never really had to answer to anyone in terms of having a real job. My last real job was, I guess, as a DJ, and I pumped gas at one time in Calgary. So, I've never worked in the financial industry. I've only done it my way, I guess. Not to start singing a Frank Sinatra song, but that's a little bit of a background. So my approach is strategy-based trading. I trade on rules. So if A plus B plus C happens, I buy. And then if D plus E happen, I sell. I have algorithms that identify the trades. I do not let human judgment into my decision a whole lot. I try to minimize that. In fact, with my day trading strategy, there really is no human judgment. It is all algorithmic. Swing trading and position trading, I still have a little bit of human judgment, although I am working to phase that out as well. I make trading decisions based on rules, not emotion. Emotion is the enemy. If you are a human, you are predisposed to fail in the market, and I am as much guilty of this as anyone. I let my emotions get involved, and so I just decided to come up with an approach that didn't let emotion into the equation. And so, when I show you my day trading, it's entirely based on algorithms. Those algorithms that I currently use, and they're really, they were started 25 years ago, but the latest rendition is something that I began 3 years ago. My wife and I, we decided to sell our big fancy house here in Kelowna, and we moved to Hawaii. And I just focused on going algorithmic. At that point, I was trading and I could see the writing on the wall. The computers were taking over, and I needed to be more effective, faster. And so I began writing the algorithms that are now the basis of what I'm going to show you tonight. That process has taken me 3 years in development. So it wasn't all that bad. We lived there. That was my view from my office as I wrote my algorithms and studied the market. If you're ever in Maui, this is called Kapalua Bay, and there's always some turtles hanging out over here, some good reefs over here. There's a little surf break right there, and For those of you that read my weekly newsletter, you might remember a couple months ago I wrote an article about my daughter and I scuba diving and getting caught in a riptide. Well, that was right about there, and we had to crawl our way back to the beach on the bottom of the ocean because we couldn't swim against the current. Anyway, I digress. So how do I measure performance? This is going to be important for what we talk about at the end of the webinar, because I'm going to explain my strategy performance. But in order to get there, I have to just make it clear how I measure performance. I use something called the reward for risk ratio. What that means is if I buy a stock at $10 and I plan to lose at $9, I have $1 a share in risk. That is the risk. If I then sell that stock at $13, I have made a reward of $3. The reward for risk ratio in that case would be 3 to 1. Pretty simple. And when we go through some charts, we'll emphasize that a little more. The reason we have a risk limit, that $9 limit, is because our number one goal is capital preservation. Every time I make a trade, I want to plan to lose. And if the trade doesn't work and I fall lower, then I get out of the trade. Because again, number one goal for me and hopefully for you is capital preservation. To make money in the market is not about being right. A lot of people think it is about being right. It's not. It's about how much you make when you are right versus how much you lose when you are wrong. We are always going to be wrong just about every day. It's very rare that I have a day when every single trade is profitable. So just about every day I have some losses, some days even more losses than winners. But what's important is that my losses are not big, they are relatively small, and I have bigger profits. And so at the end of the day, the week, the month, the profits are there to outweigh the losses. And so I really want to take the emphasis off success rate and onto something called expected value. The expected value is the probability of being right times the average profit when I am right, and then subtract from that the probability of being wrong times the average loss when I am wrong. And you want that number to be positive. And so when I show you the performance of my strategy later, we'll get into a little bit more about that expected value concept and how my strategies, or primarily my day trading strategy, which is what I'm going to show you, has a very positive expected value and very consistent on the profitability. But anyway, we'll get into that at the end. We've got lots more learning to do before we get there. So if we return to this chart, just to return to the concept of reward for risk, we have our entry price here. We have our risk tolerance level there. And in this case, the stock went up a multiple of the risk. So that's reward level 1, reward level 2, level 3, level 4, level 5, level 6, level 7. And it closed the day right there, which was, what was that? 1, 2, 3, 4, about 4.5 times risk. What that means is that if the risk of the trade was $100, this trade made $450. Now the risk is not how much of a position you buy. It's not saying you bought $100 worth of the stock. The risk amount is the difference between your entry price and your risk price. And in this case, that was 20 cents. And because it was 20 cents, if your risk amount was $100, then in this case, you would buy 500 shares. Now, these are concepts that I'm going over pretty quickly, but they're all concepts that I teach my students, and they're really the core to the risk management technique. So what does my trading day look like? Well, I trade from market open till close. Most of the action happens in the first half an hour, but some days I might make trades all day long. Most days that's not the case, although in the past month with the correction and the huge amount of volatility, I've pretty much sat in front of my screen all day. It's rare that I do that. In a normal market, I would do most of my trades in the first half an hour. Some days, I might have another hour where I make day trades as well. So I say here that I'm doing my day trader strategy throughout the day. Typical day, the first half an hour, and then I come in the last 15 minutes or so and exit my positions. For my simple swing strategy, It gives us entry signals every 13 minutes, and I'm going to show you an algorithm later that identifies every stock that meets the criteria of this strategy through the day, and it will give entry signals every 13 minutes. Not that it will give an entry signal every 13 minutes, but every 13 minutes it goes through the process. But again, the majority of the entries come in the first 30 to 60 minutes. And then I have another longer term swing trading strategy called my action breaks strategy. And we do the analysis for that strategy in the last hour, really the last half an hour. I start working on it some days a little earlier, but it takes me about 5 to 8 minutes to do that process. And then I typically would enter those positions in the last half an hour of the day. Again, the goal, because we humans mess things up in the market, my goal is to minimize human judgment. If you are a normal human being, you are predisposed to fail in the stock market. So we want to take our emotion out of it by using rules instead of our heart. So what do you need to get there? Well, there's a few things. The first is knowledge. You need to have some core skills to be able to trade the market. Now, there's stock market basics, like how do you open a trading account? What is the bid? What is the ask? What is volume? These sorts of things. Those are really basic things, but for someone starting out, they don't know that. I can teach you those things. Take 20 minutes. Then you need to know the basics of analysis. So what are the 6 elements of chart patterns, for example? Support, resistance, optimism, pessimism, price volatility, and abnormal activity. What are those things? And from those things, combined with something called an inflection point, we can start to identify patterns on charts. And we can use some of those elements to do our risk management. Because again, number one goal, capital preservation, which leads us into money management. How much capital do we put into each trade? How much risk should we take? All of these things come into the risk and money management area. Now, something that I spend a lot of my time doing, and it's probably my favorite thing in trading, is strategy development. I really enjoy coming up with the rules for when to buy, when to sell. I actually enjoy it far more than actually trading. Trading to me is kind of the process that you have to do that justifies the strategy development. It's obviously where you make the money, but if you don't do the strategy development well, then you can't make the money, right? And not everyone has the time or the knowledge to do strategy development. And one of the things that I do for people is make my strategies available to them for a fee, which I will talk about later. If you want to save yourself the time and capital required to develop a strategy, I can give you access to mine and the tools that I use to identify mine. But if you want to do it on your own, then this is a real important component, how to develop a trading strategy. And then there's just the mechanics of trading, the processes to identify the trade, to execute the trade, to enter your stop loss prices, to set up your computer, to manage your capital, to file your taxes. All of these things are just kind of the mechanical process that goes into having a business of trading. And some people aspire to be a full-time trader. Others want to do it part-time to complement their income. Maybe they can work as traders 2 days a week because of the way their normal job works. So this is all the things that go into the mechanics of trading and running it as a business. Something else that you need are strategies. You need the rules for when to enter, when to exit, how to size your positions and manage risk. These strategies should be well tested. You should understand them, and you should really leverage the power of statistics. All of my strategies are based on thousands of trades that I have data on. So when I say I have these rules, one rule, for example, is there must be an action candle on the 2-minute chart. The market factor must be long for long strategies or short for short strategies. I have a few more rules. Well, all of those rules I can program into a computer. And because I can program it into a computer, I can then test it over days and days and days of data. And I'll show you a little excerpt from a spreadsheet that I have. And in that spreadsheet, I have, I think, close to 30,000 trades on the short side and I I think pushing 50,000, maybe 40,000 trades on the long side. By long, I mean buy side. So with all this data, I can start to test for different values of indicators or my algorithms. And for example, I can say, well, if what I call the price significance of one of my indicators is between 1.7 and 1.9, what are the results? And what if I make it between 1.9 and 2.2? I can test that because I have all this data to utilize that. And from that, I can optimize the values for my algorithms and come up with the algorithm that works the best over thousands of trades. Not what worked the best over the last 5 trades, because we don't really care what happened over a small number of trades. We have to develop strategies based on what works over thousands of trades. That's a very time-consuming process. And so when I say I've spent 3 years developing the algorithm, a lot of that is just collecting data, fine-tuning, adding new algorithms, fine-tuning, modifying an algorithm, fine-tuning. It's just this constant process, very time demanding, but has huge results. Because as I said, just in the time from the last time I did this presentation, which was in May, I've added some things to my algorithm that have doubled the performance of the strategy. So it pays off, but it's a lot of work. Another thing you need is tools. So when I am swing trading and position trading, of course, we'll talk about position trading on Thursday. We're not going to talk about it tonight. But I use a tool called Stockscores, which is a website that I own, and I can just jump over there. There's a tool here called the Market Scan. I'm not going to show you this tool tonight. We'll do that on Thursday, but that's how it looks. It has all these filters, and I can run scans. I can select preset scans. Some of these are for position trading. Some are for day trading. Some are for swing trading. Most of the time as a tool for day trading, I use something called TradeStation, which is this program right here. And so with TradeStation, and it's nothing to do with me. I don't own TradeStation. They don't pay me to say this. I simply use it. I've used it for over 10 years. So I can run a scan in TradeStation. The settings of the scan are something I've defined, not something that comes with TradeStation. I have to build it. I can then copy all these symbols and I can paste them in this screen, which I did before I started, so it wouldn't take a long time. And then I basically have an algorithm here, which is this something here called the Day Trader Finder, which has been programmed based on my algorithm. I didn't program it. I hired some people to program it. And it will identify valid trades for my strategy in real time. And so you can see right here, it says action. That's the time of the action candle. So for example, DLX, just look at this row right here, DLX at 12:44 Eastern time triggered an entry signal for my strategy. The capital requirement for that trade was $18,000. This is before margin. So when you're day trading, you can use 3-to-1 margin. So if you're trading with a $100 risk tolerance, the actual capital requirement is this amount divided by 3, so $6,000. And it ended the day with a 3.73 reward for risk ratio. Now, if I go over to this tab here, I can punch in DLX, and it will automatically plot the entry point, which was right there, and just shows how that stock moved up once the entry signal triggered. It's all automated. This is all computer driven. I didn't do anything to draw these lines on here. All of this stuff is done by the computer based on the algorithm that I spent the last 3 years developing. Now that was a fairly capital intensive trade. They're not always that much. Typically in the middle of the day, the trades will be more capital intensive. At the start of the day, they will be less. So here you can see some of the ones from 932 and the capital requirement much less. So we can look at Pioneer Energy, which is PES. If I click on this, it should actually update here, and it did. So PES triggered there. I'm not sure why it's not drawing my lines on there. It should have. I must have a setting wrong. I don't normally use my laptop, which is what I'm on right now for doing this. But anyway, this is a $2.50 stock that went up to $3 by the end of the day. The entry signal here at the pink dot. Okay. Excuse me. So that's the TradeStation software. Now, if you took one of my courses in the last 5-6 years, I've really encouraged people to use TradeStation. About a year ago, I started a service called Active Trader Live, and my aim was to simplify day trading because I realized that a lot of people didn't want to learn how to use software like TradeStation. So for those that like learning software, for those that are savvy with that kind of thing, I will give you the indicators like the action candle indicator and my different trend line indicators and a lot of my algorithms. If you are my student, I will give you those indicators, and you can use TradeStation on your own. For those who want to really just focus on entering trades, don't want to learn how to use the software, I have created algorithms and processes in something called Active Trader Live, which do the work for you. And it's something that you can subscribe to. I'll talk about it in more detail later. The subscription to Active Trader Live is cheaper than subscribing to TradeStation. It's less work. Some people like to be independent, and so by all means, go learn how to use TradeStation. I'll give you those indicators so you can learn it. But I've got some specialized indicators that I use in Active Trader Live, actual strategies, which identify the entry points, entirely automated, and that's what you see here on this screen where it's got all those entry signals. You also need tools for doing your order entry, so you need to have your broker, and they have a platform. Some people use brokers where the platform is web-based. That's okay. It's a little slow. Others will use dedicated software. Things like Thinkorswim or Interactive Brokers have a dedicated software platform, which is going to be faster. You can use something called a hotkey, where something like hitting the Alt key and the number 1 will automatically buy 1,000 shares. And it's very quick. So you bring up the symbol, click Alt 1, you're in the trade. So when you're trying to get a lot of trades filled quickly, those kind of tools are useful. Not super important when you start, but once you build up your capital base and your experience, it's nice to be able to do those really fast order entries, and these more advanced order entry platforms allow you to do that. I also do a lot of post-trade analytics. I'll show you my spreadsheet in a minute. I do that in Excel. You can use Word to copy and paste the chart of every trade you make into a Word document just to analyze what you've done every day, learn from it. The market gives you a test every day. You may as well get the lesson as well. And by following your past trades, you can start to learn some things from what you've done. And then, of course, we have this service called Active Trader Live, where you can essentially watch the screen that I use to identify my entry signals. You can watch that as well. And I'll show you that in a minute. Another thing you need is process. You can have the best rules in the world, but if you don't have a good process to identify the trades in a timely way, you're going to be too slow. And so we need a step-by-step plan for implementing our trading strategy. That process should be very mechanical because you want to keep your emotion out of it, right? And so step-by-step, logic-based, efficient, as fast as possible. Our goal is always to take out emotion and just be kind of a robot and just make the trades that meet the requirements of our strategy, because we know from our testing that the strategy has worked really well. Do we know that our strategy will continue to work tomorrow? There's no guarantee of that. I have thousands and thousands of trades in my database proving that my strategy has been working great, but that doesn't mean it will work tomorrow. I assume it will, but and I keep trading it, but along the way it may not work as well. And I therefore am always working to refine my rules to make them better, to maximize my profitability, and to sort of evolve with the market. The concept that I use for trading today, conceptually, is very much similar to what I did 20 years ago. But my process is much more sophisticated today. I'm using algorithms now. I'm doing everything I can to take human judgment out. The market moves faster today than it did 20 years ago. The margin of success is slimmer today than it was 20 years ago. So we have to be better. But fortunately, computers are more powerful. We We can mine data better than we ever could. So even though the market's maybe faster moving today, we also have better tools today. So in terms of the process, I have a process each morning where I scan the market for my action candle indicator. If I'm day trading, it's on the 2-minute chart. If I'm swing trading, it's on the 13-minute chart. I then assess those stocks to make sure they satisfy the other rules in my strategy. There's like 3 to 5 rules, not complicated. Once I see a trade that meets all my rules, I enter the trade. Could be long, could be short, could be a buy, could be a short. Once I'm in the trade, I'm monitoring for an exit signal. Most of the time, I hold until the end of the day. Some days we exit early. Some days we get signals to change our focus. I might start the day looking for buying opportunities, and then in the middle of the day, there's a signal from the market that we need to actually look for short sells. And so for an hour, I will look for short sells. So that's what I mean by a change of focus. I have this service that I make available only to my active trader students, something called Active Trader Live, where a small number of people can watch my screen that I'm using to get my real-time trade alerts. You can watch the same screen. So the same screen that I'm using to know what to buy, what to short. I've got a webinar, much like tonight, where in real time it's doing or projecting what I'm watching. Of course, you also need capital. I think everyone should start with $0 of capital because you have to learn first. Number one goal, capital preservation. So even if you have $10 million, I think you should start with $0. Simply practice to begin with. As you gain experience, confidence, then you can start to use your real money. And we take our risk tolerance amount and multiply it by 200 in terms of the ideal amount of risk capital. You can do a little less, but if you're doing less than that, then you have to choose lower price stocks. So for example, let's say your risk tolerance, in other words, the amount that you're willing to lose on any one trade, is $100. Take $100, multiply it by 200, that's $20,000 of capital to trade that risk tolerance level. If you want to do $50 of risk per trade, $10,000 of capital. Now you may say, well, I only have $3,000 to trade with. $3,000 is what I started out with when I started trading back early 90s. And if you're going to trade with less capital, then you're going to have to focus on lower price stocks because they're not as capital intensive. So then you're going to be looking at stocks under $5. They don't tend to be as liquid, but they tend to be much more volatile, which means you can take $1,000 position and still make $200 or $300 if the trade works. It's a process of building up your risk tolerance as you gain success. So if you do something, again, we judge our performance by reward for risk. So if you earn a reward for risk ratio of 10 at $0 of risk, now you can start trading with $50 of risk. Make another 10 RR in profit. So you've made $500. Now increase your risk tolerance to $100 and make another 10 RR. So you've made $1,000 of new profit. Now you increase your risk to maybe $150. And it's a process of increasing your risk as you are successful. That way, you can use your profits to mitigate the risk to your capital base. So you're really only increasing your risk tolerance as you make money. And if you have a streak of losers, then you tail back your risk. So if you lose $500, bring your risk tolerance back to $50. So that's the process in terms of scaling up your risk tolerance. So what are some of the things that will help you succeed? I will tell you that trading is very simple, but it is not easy. And it is not easy because humans are emotional, like I talked about. And we tend to want to rush in and make $1 million in a month. We aren't always rational, especially in a market like we've had this October, where we had a correction, lots of volatility, lots of emotion, very easy to make mistakes, not because there's anything difficult about executing the process, but because the volatility really sucked our emotions into the game. And I'm guilty of this. I had a couple days this month where I didn't follow my rules because I thought I was smarter than the rules. Why? Like, for example, on a day when the market was down 300 points and my rules were telling me to short stocks even more, it was hard for me to think that it could go down 600 points, which is what they ultimately did. And so I didn't take all the trades that I should have. I've been trading for 30 years and I still got sucked in emotionally this month. So what is required to succeed? There's just no replacement for practice. Having focus. You got to sit in front of that screen and do the work. And if you're a swing trader, maybe that's only an hour a day. If you're a day trader, maybe it's 30 minutes in the morning and then kind of watching through the day. This month, focus has been maximized because we've had so much volatility. We won't see the market behave the way it has for much longer. It typically lasts about a month. It takes determination. You have to stick with it and learn. And I can give you the rules, I can tell you what to do, but if you don't have the determination to learn it and put in the work, you're not going to be successful. And that's really no different than anything else. If you want to be an athlete, or if you want to be a great musician, or if you want to be good at your job, you got to do the work and be determined. Simple. If you want to, get a great, strong body and go to the gym, you got to do the work. Someone's not going to lift the weights for you. And it takes discipline. You have to follow the rules. So a lot of people approach the market without a plan, without strategies, without really knowing what they're doing. I would equate that to gambling. It's no different than going into a casino in Las Vegas and putting your money down on the roulette wheel. If you don't know what you're doing, you're a gambler in the market, and the market will take your money quickly. You might get lucky. You might ride a hot sector. I've seen lots of people make money without a lot of experience in something like the cannabis stocks or the gold stocks 5 years ago. And they think that they really know what they're doing because they rode a hot market. And then 5 years later, they've given back all of their profits because they really didn't know what they were doing. They just got kind of lucky. So don't be a gambler. Follow a strategy. Have a sound process that you have tested over time, or at least have got from someone who has tested it over time. So how do you become a day trader? The path that I took was I developed and tested my own strategies. And as I said earlier, it took me about 8 years to get to that point. A lot of expensive lessons, thousands of hours. I calculated one time, I think it's now well over 20,000 hours I have spent trading and learning to trade. So that's pathway one. When I started trading, there wasn't a lot of people teaching how to trade the stock market. There were some people teaching how to trade the futures market. There were some books out about that, but there really wasn't a lot about trading the stock market because active trading of the stock market wasn't a thing. Back in the early 90s, it was just sort of starting. Commissions were very high, so it didn't make a lot of sense to be a short-term trader. Nowadays, commissions are cheap, so you can trade in and out, and commissions don't eat you alive, right? So the other way to do it is to have someone like myself teach you and benefit from it's going on 30 years now of experience. And I will teach you my approach. I don't like to teach a lot of people because I don't want my approach to stop working. And if you followed me for a long time, you'll know that I've been scaling back the amount that I teach every year. I used to do maybe 5 or 6 courses a year, and in actual classrooms at universities. And then that became maybe 2 or 3 courses a year that I teach online. And, now it's 1 or 2 times a year that I do this. So, and I don't know how much longer I will teach it. I enjoy teaching it. I think it's good for my trading. And I like that I get paid to teach because it means I don't have to take money out of my account, or as much money out of my account to live off of. But as my capital base grows, teaching becomes less and less something that I want to do or need to do. So the way that I teach today is online. I have something called the Stockscores Education Center, where I have all of these modules online. There are what are called the foundation lessons, which is the theory behind what I do. Then we have the investor and active trader areas. And so maybe before we get into the performance of my strategy, I'll just quickly show you this. So we'll jump back to the Stockscores website, go to Trader Training, down to Education Center. And this is something that you can go check out. These are the free lessons. They're just videos, but if you want to watch some of these videos, I welcome you to do so. Within the foundation area, we have more in-depth information. So there is a written lesson. If I click on this, you will see the written lesson for the 6 elements of chart patterns, which I talked about earlier. You can watch a video that explains that. And so there is a video there. I could click play and the video would start. That particular video, I think, is about 40 minutes long. There is a quiz. Oh, actually, there's an assignment. So there is a number of questions, things for you to develop your knowledge. And then there is a test right here. I've done this test already and I got 100%. Hooray for me. And so there's questions there to help you assess whether you understand the concepts. And so you work through this in the order that they are on screen. So you would start at the top and work down. There's maybe, I don't know, 10 hours of work there to learn the theory. And once you have the theory, then you can start working on the strategy. So the day trader strategy lesson is right there. There is a written component and there is a video. No assignment or test, because really the assignment is executing it. And you're applying the theory that was taught in the foundation, and you're learning the rules of the strategy. So these are all the active trader strategies. And then there are investor strategies as well. We'll talk about the investor stuff on Thursday during that webinar. If you are interested in managing your longer term portfolio, the investor area is your focus. If you're interested in, generating income from actively trading the market, then these strategies will be your focus. The investor course gives you access to the theory, the foundation lessons. It gives you access to my investor strategies. It gives you access to my investor strategy market scans, which I'll show you on Thursday. Email support from me as you learn. 3 years from now, if you took my course, I will still give you the same email support I always have. A good part of my day is spent answering questions from my students. Happy to do that. I sit in front of a screen all day trading, and I've got lots of time to answer email from students. And one of the things too is I don't have a lot of students. I teach 50 to 100 people a year. And so, it's very manageable for me to do that. With the investor course, you get 6 months access to the Stockscores tools, primarily that market scan tool, which you can renew for $300 a year. Active trader course. So again, for those more interested in generating an income from trading the market, you get the same things that you get with the investor course, so the investor strategies, the foundation lessons, but you also get the active trader strategies. You get access to those market scans on Stockscores. You still get email support from me. You can still renew your access to our tools for $300 a year, and I can tell you we don't make any money off of that. That's just to pay for the data feeds that we use to keep Stockscores going. But you also get my proprietary real-time indicators for TradeStation. So my action candle indicator, I have something called a pivot trend line indicator, message candle, a couple others. And I think most importantly, and the biggest change in the last year or so, is access to my active live service, where I let the algorithm do all the work. I give you my opinion on how I think the day is going to go. I talk a lot because the computer does most of the work, but every day there is a live webinar all day long from market open till market close, where my processes, my computers are identifying stocks, no emotion, all mechanical, and you can only use that tool if you have taken the Active Trader course. So that's Active Live. I create and monitor the market for day trades. I have automated processes that identify trades in real time. It's a live webinar. You log in each morning a few minutes before the market opens. It's automated, instant trade signals. Computers are powerful. They can do things that humans can't do effectively. So and when I say I really mean my computers, we're doing the work to find the trades so you can focus on making them. It's the exact same tool I use to identify the trades that I make. You're watching it as well. And it's only available to Stockscores Active Trader members. And the reason why is I don't want hundreds or thousands of people doing the trades that I'm trying to do. If there's a small number of us doing the trades, the market can absorb those trades. I've seen chat rooms where there's 1,000 people following the host of the chat room's trades. That can't possibly work. If there's that many people all trying to make the same trades, imagine what happens. I mean, you can, if you're the host of the chat room, you can go in and buy Apple and then tell those 1,000 people, hey, I bought Apple, and they all go in and buy Apple, and you just sell it because those 1,000 people are going to generate enough volume to move the stock. And maybe not so much on Apple because it's such a liquid stock, but there's lots of stocks that can be manipulated and pushed around by these guys that run these large chat rooms. So my chat room's small, typically it's less than 50 people. So sometimes it gets a little more than that if I've just taught a course and we're doing some live training on there. A lot of my students just run the processes themselves in TradeStation, and then some are just following me, especially when they're learning. They like to follow me with Active Live. So what does Active Live look like? This is it. I recorded this today. It's got 3 areas on the screen. These are the swing trade alerts right here. These are the long trade alerts right here. You can see the times. So there's all the trades from 9:32, 9:56, and so on. These are the short trade alerts. And so some days we're only focused on shorts. Some days we're only focused on longs. Some days we do both. And there is an automated process that runs throughout the trading day. Every 1 minute, there's an automated process that runs, and it copies, or it runs a scan first, and then it copies all the symbols from the scan. It's not on this screen that you see, it's on a second screen. So now you're watching the algorithm run the scan, and it's going to copy and paste something here. There you go, see it? And it just pasted in all the short candidates for that time interval. And this was at 1:09 Eastern time. Oh, and there's actually a verbal announcement of a trade. Again, the computer doing all that work. So it's pretty cool how that all works. And you just listen to it as you're trading, and you listen for the sounds that are happening. I talk a little bit at the start of the day and at the end of the day, but for the most part, we'll let the computer go. Now, the one final training option is something called the Mentorship. The Mentorship is 12 weekly online meetings. The first meeting will be November 20th, and it's really a much sort of higher service level in terms of how you learn the material. I walk you through it. Each week we do an hour-long class, and those classes range from the rules of the strategy, the processes for finding the rules, how to use TradeStation, how to use Active Live, capital preservation, techniques for controlling your emotion and being disciplined, that sort of thing. Each one of my students also gets a private one-on-one online meeting with me for about an hour. We'll do that toward the end of the mentorship. And because I don't have all the time in the world, I am limiting this service, this mentorship, to 15 students. I already have 10 people registered for this class. I only do it once a year. I'm not certain that I will do it again next year. Maybe I will. I just can't commit to it yet. So this may be the last time. So again, 15 students is the limit, and there are currently 5 spots left. First come, first served. I don't play any preferences. Whoever registers first out of those, or I guess the next 5, that's who gets to attend. So I'm complementing the online trading with live training that starts November 10th. So on November 10th, I'm going to do a 3-hour overview class for those that take the investor or the active trader course. And in that class, we will review the theory, how to read chart patterns, risk management, trend lines, all kinds of concepts that we'll go over. It takes 2.5 to 3 hours. So we'll do that Saturday morning, 9 to 12 Pacific time. And then we're going to have what I call my strategy application sessions. So for those who take the investor and the active trader course, we are going to do investor strategy nights for about an hour for 3 sessions. You see the dates there, the 19th, the 21st, and the 22nd. We will do market scanning together. I will just do the market scans. You're going to help me pick stocks using the Stockscores market scan tool, and that will be for everyone that takes the investor and active trader course. For those who just do the Active Trader course, you also will get 1 month free of that Active Trader Live service. So you'll be able to watch my live trading as it happens and hear my commentary, that sort of thing. The first month that you would use that, you can pick whatever month you want, but the first month would be December because, of course, that's when the next month starts. I think it actually starts November 26th and goes till December 19th. Then we're going to take a break for the holiday season. I'm taking my family to Australia and New Zealand over the holidays, and then we'll start back up again in January. So, special offer. Anyone who registers for the Investor or Active Trader course before Thursday, November 8th at 11 p.m. Pacific time will get that Saturday overview class and the strategy application series for free. That's a $390 value. The overview class, again, Saturday, November 10th from 9 till 12. There you see the dates for the investor market scanning sessions. And the Active Trader Live trading sessions is up to you. You can pick any month. If you want to do it December, great. If you want to do it next June, up to you. You just send me an email if you have taken the Active Trader course coming up here. Let's say you take it now and you want to apply your Active Trader free month in January. You send me an email, a couple days beforehand, and I'll send you the link to log into it. Here's the pricing of the class. Investor course is $2,495. Active Trader course is $3,495. And the mentorship is $5,495. If you took the investor course last year and you want to upgrade to the mentorship class, you just pay the price difference plus $250. You need to email me because I need to send you a special link for that. If you have an interest in doing the mentorship course, again, there's only 5 spots left, so you need to email me. I'll give you my email address in a moment. I know we have people from all over the world in this webinar tonight, and so just want to remind everyone that this is in Canadian dollars, which makes it about, 35% cheaper if you are thinking about things in US dollars, because the Canadian dollar has been relatively weak compared to the US. So I want to just launch a poll now. I don't like to bug people. And so if you have an interest in getting some follow-up information from me, just answer this poll and then I will know. So after this poll, we are going to look at the performance of the day trading strategy. I'm going to give you some hard numbers on how well it has been doing since March and give you a sense of how the numbers look, but I'll leave this poll up for another minute or so, and again, if you don't want me to bug you, just say no. I don't care. I won't bug you. I'm not, I've taken webinars from others and they just send me all this spam and garbage. I don't like to do that. So if you have some questions, you can also type them in now and I will answer those after we look at the performance of the strategy. So the way it'll work is I will send out an email with some follow-up information on this webinar in the next day or two. And I may do one more after Saturday. So you might, if you say yes to this, you might get a couple of emails from me. By attending this webinar, you will get an email from me with a link to the video of this. So if you felt like I went through a lot of this stuff too quickly, no problem. You'll be able to watch a video replay of it. All right, I'm going to take down the poll. Thanks for answering. Close that there. And for those of you that want to sign up for the Investor or the Active Trader course, just go to that address that you see on screen, stockscores.com/learn, or you can just go into the Stockscores website, go to Trader Training, and learn how to trade. You can actually register right on this page. It will give you instant access to the course material. Just buy it right here. There's no delay. You sign up, you pay, and you have access right away. You'll get some follow-up emails from me regarding the online live training that's coming up in November, but it's all pretty instant. And again, if you do that before November 8th, you get that bonus training for free. There's my email address if you have any questions, or if you would like to do the mentorship course. I have to send you a special link for that. You cannot buy it online, like on the Stockscores website, because I'm controlling the number of students, right? There's only 5 spots left. So if you want to do that, email me. I'll send you a link back and you can then register. And if 10 people ask me for it, I will, I don't know how I'll do that. I guess first come, first served, and then I'll give people a day to purchase it. If they haven't, then I'll go onto my waiting list. If you want to follow me on Twitter, just look up Stockscores on Twitter. I recommend that you follow or subscribe to the Stockscores YouTube channel. I put up at least one video every week. This is all free content. My analysis of the market. I've had a few videos on, setting up trading computers and the correction. All that's free. So go to my YouTube channel. That's the address there, or just look up Stockscores on YouTube, subscribe to the channel, and then you will get some of that bonus stuff. All right, let's talk a little bit about the economics of my strategy, the day trading strategy. So again, we're going to judge performance using reward for risk. And if we know probability plus reward for risk on average, we can come up with the expected value. I talked about that earlier. And most importantly, we can define something called a profit curve, which is what I'm going to show you in a moment. So it starts off every day. I take the data from this. All right. So I grab all of this data and this is all computer generated. So there's no human judgment, right? I copy all that and I put it into a spreadsheet. And then I have some more analytics that I add to this. And from that, I can start to define the performance of the strategy over time. So these are all the trades from October 29th, and it shows the RR for those trades, reward for risk earned on those trades. So for example, this one earned 4.33. That was on EXEL. And I don't know if this is the short side. See that there? These are trades from between 9:30 and 10 o'clock. There is something called a market factor, which will take trades later in the day. And in this case, there was a market factor. See how here it says override? So I teach you something called market factor overrides, where we will take trades later in the day. It doesn't happen most days, but in the month of October, it's happened quite often. And then you can see all of the performance of those days that came later, plus the time of the trades there. There's some values of different indicators there that I use to fine-tune and optimize my strategy. And then I've got the performance there. Now, performance is a little bit easier to see when we look at the averages by day over time. And so this is where we take those daily totals and add them up and average them so that we can get the average profit or loss in reward for risk terms. So for example, on October 8th, the total profit was 6RR. So that means on $100 of risk, there was $600 in potential profit. And that was over 15 trades for an average profit per trade of 0.4RR. Now we have other days which were huge because we had a correction in October. Corrections are the most profitable times for my strategy. My strategy is quite consistent in profitability, but when you get a correction, you have days when you get huge profit. So there's one of those days, October 10th, 74 valid trades in the day. Total RR earned that day was 411 for an average profit per trade of 5.55. I think that's the best day that I've had for the period I've been testing. I'm pretty sure that was the highest day. Not all days are profitable. You can see here the 25th of October was a losing day. But if you look at the black versus red, there's more black days than red days. And in fact, if you go back farther, it's even a higher percentage. These are the averages by month. So the total here is what we want to look at. So these are the average profit per trade for the month. So in the month of March, there was 515 valid trades. Not that you would ever take 515 trades in a month. You might take 50 trades in a month or 100. But what I focus on mostly is the average, and the averages are pretty strong. Now, one thing that this does not include is slippage and commissions. So I find that you should deduct from this number 0.15 to 0.25 in slippage, depending on how well you execute your trades. So in a month when the average was 0.66, realistically, your average profit per trade was more like 0.4 RR. So if you did 100 trades in a month, you could earn 40, maybe 50 RR in total. That means on $100 of risk per trade, maybe $4,000 to $5,000 of profit potentially. Now that assumes that you're disciplined, that you're focused, that you follow the rules. This is just the math. There's no bias in this. There's no human judgment in this. This is just the math. How we execute it is a matter of our focus and our discipline. Emotion largely taken out of it, but still you can get emotional, especially on days like that when it's just such a crazy market and you've got huge swings. It's easier, I suppose, to let your emotions into it. So anyway, what we do then is I take all of these numbers, these average numbers, and we add them up each day to define what I call my profit and loss curve. And it looks something like this. Now, what you want to see for those that are interested in developing their own strategy, you want to see a P&L curve that is consistently moving up from left to right without a lot of volatility. Because if you have a profit and loss curve that goes like this, you will go crazy. Your emotions will get too involved. What is good about this curve is that, it is pretty linear. Now, there are times when it went kind of exponential. These were corrections. Remember I said corrections are the most profitable time for my strategy? It has been extremely profitable in October and late in March when we had corrections in the market. That's simply because you get such sharp moves in the market, and because we're willing to short stocks as well as buy stocks, the average profit per trade in a correction is higher than normal. Normal, it's kind of consistent. We're just in this steadily climbing pattern here. But when you have corrections, you get sharper moves. So this is the cumulative profit since the start of March. Again, that's assuming you took every trade with no slippage. Not realistic. You're not going to take every trade. You're going to have slippage. So this is simply the computer model showing what could be done if you were perfect, and we're not perfect. So discount that by a wide margin. But still, the point of it is that the average profit per trade is consistently positive, and the consistency is linear. There's not a lot of volatility in this. It's orderly, and that is a big improvement. In fact, if you remember seeing this chart, because I showed a similar chart like this, say when I did this presentation a year ago, it was still moving up from left to right, but it had a little more volatility. And if you go back, I think there's a video somewhere on YouTube with that, you can find it and see that the strategy has been improved a lot. Number one, the average profit per trade is higher because I added something called market factor, which is a new rule or set of rules that is in the strategy. And that has made a huge difference. So I'm going to wrap up my presentation now. I will answer a few questions. I've seen a few people ask some questions, so I'll do that. I'll leave my contact information up on screen, and I'm just going to try to read some of these questions here. So let me just take a look at this. And I've got a lot of questions, so I'll try to just get through these as quickly as I can. So first question, what do you think of Interactive Brokers and their software? I think their software is very sophisticated, got some great tools. It is not very well designed. It seems like they just keep on adding new features without any sort of sense of design or usability. So it's challenging to learn. And I think if you don't like learning software, then I wouldn't recommend it. It has some great tools in it. There's no doubt about it. Tech support is poor, I would say. There's a lot of things that just don't work that when I try to get it fixed, no one can help me. So it's kind of frustrating that way. Commissions are low, which is good. Unless you trade big size positions, then the commissions get expensive. So it's hard for me to recommend it because I don't think it's for everyone. It took me a while to learn it. It was kind of frustrating. Next question. If you leave a desk for a few hours, do you install a stop loss on your positions? I do. However, I also bring my phone with me, and my broker, Interactive Brokers, has an app where I can actually exit trades from my phone. So I could go to Starbucks and sit there for an hour and watch my positions and actually exit them from my phone if I wanted to. Next question. Can you apply your process to day trade futures? You could. I wouldn't recommend it, but I think the strategy works with the index ETFs, and so therefore, since a lot of those index ETFs or commodity-based ETNs are based on the futures market, I don't doubt that it would work. I just don't do it myself. I used to. I traded futures probably, I don't know, 20 years ago. I find the stock market easier, so that's what I like to do. Next question. Would you show again how to record RR lines when participating in active live? Gabrielle, I know you're one of my students, so maybe email me and I can help you with that. I don't want to take too long with this presentation, and also I don't want to get into things that are reserved for people who've taken my courses. So, you've paid for that information. I'd rather answer that in an email. Next question, do you trade US stocks only or some Canadian as well during the day? So for day trading, I do almost exclusively the US market. You can day trade the Canadian market. I just find there's enough opportunity in the US. I am Canadian, but it doesn't matter to me whether it's US or Canadian stocks. To me, they're just a symbol. I like to position and swing trade the Canadian market when it is hot, because it's a lot easier to make money in the Canadian market when it is hot. It is not hot right now. It is, in fact, I think, a market to generally avoid right now, but that'll change. It's a very streaky market. Next question. How should we determine the best strategy to execute based on market conditions, since the scan we run will affect the options we get in the scan results? At any time, if you're my student, you can ask me what's working best. What I recommend right now is for day trading, use the day trader strategy. For swing trading, use the simple swing and the active breaks strategy. Actually, I wouldn't do the active breaks today because the market's correcting, but that'll change soon. And for position trading, I would use the active breaks and the Stockscores simple. And that's generally how it works, but if you're not sure, just fire me an email. If you're one of my students, happy to help you on that. If you sign up for the Active Trader course, is the investor course included also? It is, yes, you get both. Hi Tyler, I took your course back in 2005. Would I have access to any of your tools? Yes, you just have to subscribe to the market scan. If you took the course back in 2005, you're probably an investor member. So if you wanted to do the Active Trader course, because it's new since then, you would have to upgrade to that. But Julie, just send me an email and I can look it up for you. If you have taken the Active Trader course and you want to do the mentorship, you just pay an upgrade. You don't have to pay the $54.95. You just pay the $2,000 difference. If you can't make the live seminars on November 8th, 19th, 21st, and 22nd, are they recorded? Yes, they are. I record all those webinars. The only thing I don't record are the active live sessions where you're watching my live trading. And the reason is it's very computer intensive for those algorithms to run. And to have a recording run in addition to the algorithms running is hard in the computer. So we want to let the computer run the algorithm. I am interested in swing trading only. Why do you not split your Active Trader program into two? I just find that most people like to do both, so I don't do it that way. I apologize if that doesn't suit you well, but that's sort of the way it is. I bought the Active Trader, or I bought the investor course. If I purchase the Active Trader, will I still qualify? Sorry, it's cut off. I got to scroll up here. Will I still qualify for the free live trading month? Yes, you do. Your software is able to determine what the exit point was, or do you just take the high-low close for the day and assume exit was So you can use the RR method for your exits. What I'm doing right now is the market factor. So that's something that's changed in the last couple months. And that's something that's in the lesson. So if you've taken the course, go read the lesson. That's one of the great things about having all of this education material online is that, I can make an update to the lesson and to the video, which I did on the day trader strategy, I don't know, maybe 2 months ago, and it's there for you. I saw the biggest negative RR of 2.8. Did it gap up, or do you set the stop that low sometimes? Well, that's the end of day value. It doesn't factor in where you might have been stopped out. You could have a trade on that list which was minus 12, but that doesn't mean we held it till minus 12, because what you see on that screen doesn't include the exit strategy. That's just the entry and holding until the close. Can I go to TXE for observations as a learner to become day trader? To the Toronto Stock Exchange? I don't know a lot about what the Toronto Stock Exchange website has. You'd have to check it out. I'm not really sure if I may be missing the point of your question, so you can email me with more interest or more detail on that. How does your market factor change your scan? That's in the lesson, so you'd have to go read the lesson. It's not something I can go into here because those are some of my secrets that I don't want to share with a lot of people. Do I keep stocks overnight? Yeah, sometimes. Right now I haven't been. I've been keeping in cash overnight because the market's been so crazy. How is the new computer working? Works great. Thank you for asking. It's very fast. I like it. Thinkorswim, haven't used it. Many of my students do use it. They seem to like it. Do you start fresh each morning? For day trading, I do. For swing trading, not necessarily, but day trading, absolutely. So I've run through all the questions. I think I'll wrap it up there. And hopefully that was useful for you. Reminder, we have another webinar on Thursday and then again on Saturday. You can purchase the course anytime. The deadline for the free stuff is November 8th. Mentorship, just as soon as the seats fill up. We've got 5 left. And if you have any questions that I haven't addressed tonight, certainly email me. Again, I'll put my email address up on screen there. And I want to thank you for joining me tonight. Hopefully it was informative. And I hope to see lots of you on Thursday. Trade well, guys. Thanks.